Future Generation is celebrating its 10th anniversary this month. That is 10 years of investing and $44 million donated to Australian charities and philanthropic institutions over the past decade. Future Gen runs to LICs, which donate 1% of assets to youth-focused charities. Joining me for more is Jonas Daly from Bennelong Funds Management. Hard to believe it's been 10 years, Jonas. Tell us a little bit more about it and what you're doing here with Bennelong as well.
Absolutely. Well, firstly, Bennelong Funds Management is a manager of boutiques. We invest into these underlying boutique fund managers. We take an equity stake in those and they specialise in managing the money on behalf of unit holders. Bennelong does all the compliance, back office, marketing, that compliance function as well, and just allows them to focus on managing money. So we do have 6 affiliates. We have another 2 that we redistribute in the insurance-linked securities market and emerging markets. But what we're trying to do here is really provide the best of breed managers to our unit holders, but also to Future Generation, who we've partnered up with. Future Generation do a lot of fantastic work for charities. We're very proud to be part of that partnership. Now, what we do is what's quite unique with, and what Future Generation do is we provide the investments and the portfolio management and the access to those underlying returns. And in return, the investors, they also benefit from the returns, but they also invest and pay Future Generation a fee for that privilege. But then that underlying revenue gets passed through to the underlying panel of various charities. So it's a really good model, and it's great to be a part of. We have our own foundation at Bennelong. We do a lot of work with charities, so we really understand the benefits it provides for society.
So I guess that shows you the value. Just tell us a little bit more about the pro bono work that you're doing here as well.
Yep, sure. So it really is that, offering a service, to these charities in the sense of they want to focus on, raising money for their charities. They want to help people. Where Future Generation come in and they're the experts on bringing the investments together and providing high quality investment managers to the underlying unit holders. So it's a really nice model because the underlying unit holders are investing in some of the best of breed managers, which is Bennelong Australian Equity Partners that we offer, but also they're providing something back for charities. So it's a nice feel good way of being able to invest into the market, but then have some proceeds going to charity.
So you find your clients enjoy that thought of giving back. What does it mean for overall morale at Bennelong as well?
Well, look, I think it's good. We get involved in the charity work as well, and we also do raise money as a team at Bennelong. We have auction nights where we have the charities come in and pitch to us, and we put money in a box to kind of donate to those various charities. So it's really important and a big part of the culture. I think it's, we've raised over 12 million for charities at Bennelong itself, but then also partnered up with Future Generation to help them raise money for charities as well. So it's a great, really good part of our culture at Bennelong.
Let's talk more broadly about the overall market sentiment. We have the US election kicking off November 5, so they will start to vote in the next few or 10 hours or so, I guess. We are seeing markets struggle a little bit for direction, but more broadly, how do you see the thematics when it comes to global markets?
Yeah, global markets in particular, we're really focused on the US, obviously, with what's going on, I suppose, just more in the short term. But longer term, it's really about the economy and the strength of that economy in the US. So the Australian equity team are very well positioned to participate in a stronger US economy, because even though they're investing into Australian companies, you mentioned James Hardie before, those Australian companies do benefit and have a lot of their offshore earnings, in the likes of the US, and there's also Breville Group and a number of others that have over 75% of their earnings coming from offshore. So we see the US in reasonable shape. Obviously there's volatility around the election, but they've been able to drop rates by 50 basis points. They could do another drop before Christmas. So they've got inflation under control. Whereas in Australia, we have a more of a problem with inflation. It's sitting between the core inflation around 3.5% to 4%, whereas the RBA need a band of 2% to 3%. So we're a long way from where we need to be. And obviously productivity is very, very low here in the country at the moment. It's been led, a lot by the public market and not the private market. So, less positive on Australia as an economy. But once that US election passes, we feel as though the noise around that will pass, and then obviously that's a benefit to those underlying companies, and in turn those returns will be passed back to the Bennelong funds, but also the other funds within the Future Generation stable, and in turn that'll go back to the unit holders using Generation, and then in turn help those charities. So We see a really positive momentum. Once those rates come down, obviously there's long duration stocks like CSL you mentioned before, and James Hardie, they benefit as well. So yeah, very
James Hardie,
bit more positive there.
CSL, Breville, those ones exposed to the US economy. You mentioned there the weakness in the Australian economy, particularly with productivity, which is something that the RBA thinks about a lot. They are meeting today. If we are seeing a weaker economy, when do we then start to see rate cuts? I know you're not an economist, but it certainly seems to be that we're heading towards that rather than the likelihood of a rate rise. Yeah,
definitely, and I'm definitely not an economist, but just in regards to that, they need to see that core inflation number come down in between 2 to 3%, in the median at 2.5%. We're sitting at between 3.5% and 4% at the moment. So, who knows where it will go. They're obviously going to factor in a number of weaknesses there. But productivity's weak. Obviously, cost of living is putting a lot of pressure on families, but also businesses and lending as well. So we'll see what comes out of that. But we're less obviously positive on the Australian economy, but we do see some really good signs in the US.
And what's front of mind as we head into 2025 once we have this US election out of the way?
Yeah, look, it still is inflation, unfortunately, because obviously depending on which way it goes, there's still a risk of inflation going back up, especially if on the Trump side they're pushing more of internal US businesses and supporting the small businesses and really pumping up their own economy. So that could put pressure on inflation going forward, but also geopolitical risk. Obviously, we've still got wars going on in the Ukraine and the Middle East as well. But really the core thing is inflation and keeping an eye on where that's heading. And that might kind of change over the medium to long term. But at the moment, US seem to have it under control. But there could be, as whoever gets into power, and we don't know which side's going to get in. It's neck to neck at the moment, but that could have knock-on effects down the track, and potentially tariffs as well. So it's a bit of wait and see in the medium to long term.